Hello, everyone, and welcome back to Sudden Wealth. I hope you're having a wonderful day. This is actually my first video of the week. I did pre-record a few videos last week because I told you I'd be traveling Monday and Tuesday. So today is really my first day that I can record on live events of the week. By the way, guys, if you do enjoy the content, please consider dropping that like and subscribe. As you know, it greatly helps the channel. So thank you very much for your support. Now, what is happening in the Middle East, is no secret to anybody that lives on this planet. It actually showcases, well, number one, and let's get this out of the way. Of course, it's a tragedy. Unfortunately, it's not the first time, and I get the feeling it's not going to be the last time. But I do hope that they come up with a peace solution that can last longer. The longest, the better, because unfortunately, innocent people are suffering. And whenever this situation happens, it's just a disgrace. So let's get that completely out of the way. Now, I've made a reference last week about, you may recall, I did a prediction on the oil prices in the beginning of September, saying that we should get a meaningful top, for at least for a few months, in the end of September, which we did by end of September, beginning of October, which we did. 27 September, oil hit $94, $95, and that has been going down since then. Now, when the conflict like this starts, everybody, and quite rightly so, expects oil prices to jump, which they did. But if you notice, we are already almost back to the lower levels once again. Why? Because the cycles are very against oil at this moment. Now, if tensions escalate, if other regions start to have similar situations, of course, those special events will eventually overtake the cycle power. But this just gives you an example. If you contrast this with other periods, for example, 2022, when the oil prices were already running up naturally, a conflict that started in 2022 accelerates the trend higher. But again, there was a cycle for a top late February, beginning of March, and then again, we also came down from there. Stocks, the same thing. Stocks should be going up. This event should bring them down because it creates volatility and uncertainty. But they actually been creeping up higher because the movement, the cycle that we are currently is actually quite strong for that. Number three, gold prices. You may recall last week I did mention, okay, we sold off on gold quite a bit. I do expect us to start moving a bit higher, but consolidate around certain levels in the mid 50s to 60s max. But the gold does push you to the 75 or so because you get a little premium from the conflict that didn't exist before. And then what you're seeing at the moment is actually TLT, the bonds are actually ramping up higher, which means it stabilizes the rest of the market. As I've said this a million times, you are all tired of listening to this. The bond market is the most important one. So if bonds start to stabilize, try to put it in the bottom, stocks should stabilize to increase as well as other asset classes. Now, the thing with this conflict is that there are conflicting forces at the same time, and this is why you see so much volatility intraday. Negative starts negative, goes up, goes positive, then half of the indices are negative, half of the indices are positive. Oil starts positive and ends up negative. So you see a lot of volatility. The reason is because there's a fight between two trends. This situation should cause energy commodities to go up in price, which should create inflation, which should create pressure on central banks to keep hiking, which should push asset prices down. But because this is an event that carries an importance bigger than the dissatisfaction of people with inflation, there's the argument, okay, because the war is more important than 3 or 3.5% inflation, the Fed will start printing money because aid will need to go to the region, which means money needs to get printed, rates need to come down, and this is going to be painted as more important than, oh, we're going to be 1% above target on inflation or 2% above target, but it's for a bigger cause. That's why you're already seeing comparisons in newspapers that this is Israel's equivalent of what happened in New York in 2001. The idea is to create the comfort on people's minds of tolerating higher inflation on the grounds of something more important. So I think these two factors, the higher inflation coming from the war and the likelihood of money printing and quantitative easing to support the winning of that said conflict, are fighting each other. And then you have the natural cycles, which are also pushing stocks up and oil down, etc. So it's a bit of, that's why you see so much volatility. See? And when it comes to crypto, I would say in the short term is somewhat bearish for crypto. Number one, there is one thing happening, which is everybody expected a negative September, and everyone expected a very positive October. So maybe what we need is a disappointing October, so people lose kind of the hump for the rest of the year. So then we can actually rise when people's expectations are low. Don't forget, when everyone expects something to go down, it doesn't. September. When everyone is expecting October to pump like crazy, and not just be a little bit up, but just pump like crazy because the previous years it did. Once again, everyone is on the same side of the trade. It's not good. So I guess some disappointment would be good in the sense that people lose hope, they lose patience, they go away. Probably they see stocks running, so they go for stocks, whatever. They get out. So now we can go up on crypto. Ultimately, I think this will lead into money printing. I can already foresee the explanations, the excuses, the Operation Freedom, the Operation Twist, Operation whatever. It will be given a special name, and rates will be lowered, money will be printed, and that will actually help probably 2024 performance also, which ties in well with the re-election, with the election period, because as I mentioned before, you're going to be pressed to find 1 year of re-election of election where the stock market is actually negative during the year of the election. So that's why I'm saying this. Now, again, ultimately it's good for crypto as it's good for asset classes. Why? Because you're creating more money. That money needs to go somewhere. As I mentioned before, people already indebted will not get this money. It will go to the richest people because those are the ones that can take out loans. And because they already own a bunch of stuff, they end up buying assets. But if stocks are already high, but crypto is not so high, crypto becomes attractive. So that's why you see in many crypto cycles, actually almost all of them, stocks tend to run first and crypto follows. A little bit goes through also lately on the last cycle for meme stocks. Why? Because they're in the highest frontier of risk after the general lower risk things have already moved. Then we go to the higher stocks, to crypto, etc. So, number one, let's summarize this. Number one, this situation is a disgrace. I hope it stops quickly. I hope it never starts during my lifetime and even after the lifetime. That is my number one desire. However, I need to look at things as I think they're going to happen and not like I wish them to happen. So I do think that there are two things fighting at the moment. On one side, the volatility created by the conflict, the potential for higher inflation, the potential need for higher interest rates that pushes prices, stocks down, commodities up, bonds down, and gold is actually moving higher because it has also the crisis mechanism. This side seems to be starting to lose. So they were winning right at the beginning of the conflict, but they are now starting to lose. And unfortunately, I must say, because these conflicts between these two countries are not something new, they are not the first conflict, and unfortunately, I hope it's the last one. But if you ask me to bet on it, I probably bet it's not going to be the last. So the second option is, okay, will people tolerate higher levels of inflation, but will be tolerating lower interest rates, money printing, in order to support the winning and the military aid and all of that to the country which is allied with the US. I think most investors are banking on it. It doesn't matter what I think is going to happen. It matters what the market players think it's going to happen. And so far, you see the power of cycles. Even as oil spiked, and it should have spiked, and it did spike, the trend at the moment is very negative on oil. So that's why it ended up, we are almost back at the lows again. I think we went down to something like $81 before the conflict started. We are at what, 82, 83? So I think we are already very close. So guys, this is just an example. My opinion is short-term maybe bearish for crypto. However, it should be bullish for assets going forward, as I do think this will be, if this escalates further, it will create the basis for money printing and QE. If the issue is solved, I don't know, next month, it will be just a bad episode and just move away from it. But whatever creates a lowering of interest rates and money printing will eventually be positive for assets, stocks, real estate, etc. Then moving towards the riskiest part of the market, meme stocks, high growth stocks, loss making but potential for growth stocks, and also crypto as well. So thank you very much, guys, for your patience, and I'll catch you in the next one.